Trading here with us tonight, and I'm excited to get it started. First up is Pat Walker, co-founder of MissionWinners. Pat is a seasoned trader, investor, and educator with decades of experience helping people develop skill, discipline, and confidence in the markets. Joining him tonight is Richard Moglen, a respected market strategist, educator, and host of in-depth interviews with over 100 top traders. Richard's got a sharp eye and a firsthand insight into what top traders get right and what most people get wrong. They're going to dig into the market, into the mindset, the routines, the strategy, and most importantly, lessons you can put to use. So let's get to it. Pat, take it away.
Thank you kindly. I appreciate it. Thank you all for being here. They talk about things you can steal. You can steal time, possessions. We're not going to steal your time. We're not going to waste your time. We're going to hit it. We're going to hit it hard. I've talked with Richard a couple of times. I really respect his work, and I'm glad he's here. In fact, I said it to him earlier. If I didn't like what he did, we wouldn't be doing this together tonight. But Richard does really good work. I admire it tremendously. A little bit of background from me. I taught on the university level. I taught advanced level classes. My final was 24 pages tight, and I just had high expectations. Got out of that. I got involved in the investing field in 1986 and eventually became just a private investor. I managed money for people through the crash of 87. We completely avoided it. And I'm grateful for this. I have to tell you this. A man who really, really helped me that I met years ago a couple of times and talked with 101 was Dr. Martin Zweig. He passed away years ago, but his guidance helped me avoid the crash of 87. All my managed accounts were out. And so that's a little bit of my background. I also was fortunate enough to meet Ed Secota, Bill O'Neill, David Ryan, Martin Zweig. I mean, that was big stuff right there. And they all had a positive impact on me. And I'm just a sponge. All I did was soak stuff up, trying to learn what to do, how to manage. And again, my niche is stocks. I don't do anything else. I don't do commodities. I rarely do options. I'm looking for ways, methods, tactics to make money. And this is really important. I am not a day trader. If you are, fine. I'm not. I don't look at 5-minute charts. I rarely look at 10-minute charts. I'm looking to find stocks, good quality stocks, coming out of good bases, and they're coming out with good volume. And when I say quality, I mean they have either great earnings and are great sales, a leading group, and a high composite rating. I'm very stringent about what I do. You can say, why are you so stringent? I was married with 4 kids. I was a sole supporter of a family of 6. My only source of income for 10 or 20 plus years was investing profits. That was it. You said, well, no, wait, you had wealthy. No, my dad died when I was in my 20s. My only source of income was investing profits. And I learned very quickly. And a man who really helped me was William O'Neill. And talking with him and learning from him, studying his tactics and methods, just soaking it up like a sponge. What a nice guy. And hold him in very high regard. And it was a sad loss when he passed away. The idea of, and we're going to nuts and bolts it now. I'm big and stringent on finding leading groups, the leading groups. I'm big on that, folks. Top 40 or 50 groups and the leading stocks in those groups. Stocks that have great earnings and are great sales, a high composite rating. I'm really big on that, okay? Within 20% of 52-week highs, and I don't do any low-price stocks, and I don't do any thin stocks. Okay, and again, you can say, why are you so stringent? I told you earlier, my only source of income was investing profits. That's what I did. Like I said, I was fortunate enough to meet Bill O'Neill and talk with him one-on-one, and he gave me tremendous insight and guidance on how to do this. So did that, became a private investor. Like I said, my sole source of income for 10 or 20 years was investing profits. That was it. And you can say, well, you got an inheritance. My dad died when I was in my 20s, and I helped support my mom. So that was my life. Very stringent, again, in risk control. So one of the things I'm big on is this. I'm going to circle back to this, and we're going to let Richard talk too. The idea of the best of the best. I want to buy franchises. I said this at IBD meetups for years. Nobody does what Google does as good as Google does it. I'm not telling you to buy it right now, but I'm just telling you they're franchises. Amazon, nobody does what Amazon does as good as Amazon does it. On down the line. Great companies that I call them my max list stocks. Apple, Amazon, Google, Badoo, Netflix. Nobody does what Netflix does as good as Netflix does it. I buy franchises. But I want to nuts and bolts this a little bit. What I'm looking for is, and it's pretty simple, stocks go up and then they just go sideways, back and forth. And it's just a tug of war between the buyers and the sellers. Just a nice steady wave pattern, nothing fancy. And eventually we wait. And if it's been going sideways a long time, we have the discipline to wait for it to push through these tops and push through with volume. Why volume? I've studied this too. Volume tells us that other people see what we see and they're buying it. That's confirmation. Think about this, folks. Be very pragmatic. You see a stock that looks really good and it's like, oh man, this is great. And you buy it and it doesn't do anything. There's no volume coming into it. There's nothing happening. Nobody's buying it. I don't want that. I focus on a few patterns that work, that everybody can see. Again, which increases the probabilities that A, they see it, and B, they'll buy. And here's the beautiful part. Let's suppose it's just been going sideways for a month or two, and it pushes through the tops. Great. With volume, you buy. If it falls back into the base, you could sell at least a portion of it for a very small loss. I will tell you this, off the record, Bill O'Neill wanted to keep losses less than 7 or 8%. How about that? That's a fact. We control risk. If you have any big losses, it will hurt you financially, but it will also hurt you psychologically. And that's one of my degrees, is what's going on up here. You have to protect yourself. Two very important assets in the investing realm. There's the financial side, but there's also the mental or psychological side. And at MissionWinners, we combine both together in managing stocks. You can say, well, back up here a minute. What's mission stand for? Most people don't know. So I'll tell you. Mission, markets, industries, sectors, stocks, institutional support, outstanding management, outstanding product, outstanding service. Leaders, I buy leaders. And in the end, to me, is the most important letter in mission. Never say never. Never give up. Never. Keep pushing. Please. For your sake, for your family's sake, keep refining your skill set. All right? It will really, really help you. And again, the end in mission, never say never. Another point I want to make in that realm is this. Control risk. I'm pounding the table on this. A clean and simple base, one that's just going sideways. A clean and simple entry gives you a clean and simple exit for a much smaller loss. And you will find if you study charts, and I encourage you to study, to study past winners, you will find the best stocks. Pull up a chart on Netflix when you get a chance and look at the base. It was just going sideways and then explodes through that clean top a couple weeks ago, a month ago, with a really heavy volume. It tells you people saw what we saw and they're voting on it. They're buying it. That's in summation what I do. The last point I'll make is this. We never argue with price and we always control risk. We base most of our decisions off, as I stated, weekly and daily charts. When it's breaking out, I'll take it down to an hourly or a 30-minute chart, or if it's early in the morning, even a 10-minute chart. And what you want to see, flat base, and when it pushes through there, a huge volume surge. Again, why? That volume surge tells us other people see what we see, and they're buying. That's what again, I was a sole provider of a family of 6 with 4 kids in college at the same dang time. I had to get this right. So that's what we do. Does it work every time? Like I said, no, but we have our edge. We control risk. That's in summation. I mean, that's a quick summation of it, but it's what we do. But out of respect, I want our guests to talk. I'll share this with you. Like I said, I've met some great investors through the years, okay? People who really know their stuff. Google Ed Secota sometime. Look at his returns. Bill O'Neill, David Ryan, Martin Zweig, and a host of others. I really respect the work that Richard Moglen does. We did a webinar together several years ago. Richard, and we're going to let him talk in a minute, because I want to hear what he has to say. I'm not kidding. I'm going to be taking notes when he talks. I'll just tell you that. He's very rigid. He's very pragmatic in his approach. He's very disciplined. But something else I really like about him, he's a heck of a nice guy, okay? And he's humble. He's not arrogant. He's smart enough to know he's not smart enough to outsmart the market. He gets in line with it. He does great research. And again, if I didn't respect what he did, we wouldn't be doing this together tonight. So I wanted to share a little bit about what I do, but I also want to give Richard, the floor to run with it. So would you all please welcome Richard? And Richard, thank you for your friendship. Thank you for being here. Thank you for sharing your wisdom. Take it away, buddy.
Yeah, my pleasure. Thank you so much for having me. And it's great to see everybody there on the stream there. Great to be here and honored. Yeah, Pat, where would you like to start? I know you had some questions about maybe my background, how I got started.
Sure.
But yeah, lead me into it.
Okay, here we go. I've got a few questions for you, and I thank you, sir. What initially sparked your interest in investing, and at what age did you make your first investment? I'll say it again before we get. Oh, go ahead. I'm sorry.
No, go ahead.
Okay, I'll say the question again. What initially sparked your interest in investing, and at what age did you make your first investment?
Yeah, that's a really good question. And I was interested in it when kind of throughout my life, my parents invested, but they're much more index funds, retirement type people, much more conservative, all of that. But I never kind of tried to learn anything more until really I got to college. And in college, there was this class that I heard of. It was an honor seminar that you could take outside of your major, but it was so popular that only really upperclassmen got a chance to ever join it because they would give you kind of a random allocation of when you can pick your classes based on the number of credits. So yeah, if you have more credits, you're upperclassmen. That's the classes you get to take. But the class was basically called Introduction to Financial Markets and Technical Analysis, something similar to that. And it was taught by Dr. Eric Wish. And I had always wanted to take this class. I tried to get in my sophomore year, couldn't get in it. But finally, my junior year, I was able to take it. And this was back in late 2018 is when I signed up for classes. I actually placed a few trades not knowing anything in late 2018 before I took this class. But in 2019, when I took the class, Dr. Eric Wish, he's someone who's been trading for 50 plus years. CANSLIM Foundation. He's learned from O'Neill. Darvis is a big influence as well. And I absolutely fell in love with the class, fell in love with the topic, fell in love with the discipline. It was something that just kind of intuitively made a lot of sense to me. I'm a pretty competitive person. I played sports all my life, and this just seemed like another arena which could have a very strong payoff if you did the hard work, learned the system, applied the system faithfully, and of course managed risk. And managing risk, Pat, I know you preach this so much, but I was so lucky that Dr. Wish, of course, having traded for 50 years, this was one of the key principles that he really stressed incredibly hard is you have to have a stop loss. You have to cut your loss if the trade goes sour, whatever your setup is, whether it's a breakout, a pullback, you need a line in the sand that says the trade failed at that incident in time. and there's no ego. You just were wrong on your timing. Maybe it sets up the next day or a week later. But at that moment in time, you have to manage risk in real time. You have to leave your ego at the door and just take your loss and move on. So I was very lucky that from the very start, that was instilled on me. And in addition to that, the class probably propelled me 5, 10+ years along my trading journey, learning stage analysis concepts, which is very similar, Pat, to I know how you approach things, clean breakouts, trends, longer term uptrends, bases, looking for breakouts from those bases. And also in that class at the very end, we did a simulated trading portfolio where basically we had 100K of a simulated money, and we had to trade that for a month and have rationales for why we place trades, both fundamentally and technically. And most importantly, and kind of my biggest takeaway from it is he basically set a line in the sand that any loss over $500 of that 100K, you would have to really analyze and say, did I do something wrong here? Or was it just the market that stopped you out? And that process, I only had a handful of those, but actually going through that and recognizing that a lot of my losses were due to entering at the wrong time when the stock has already made a little bit of a move. It might have been the right stock, but I entered it at the wrong time outside of a proper setup. And that's something that I've carried with me as I manage my own Roth IRA, my own margin account now. And that's a key lesson that I was very thankful to learn very early on with fake money. And that whole class obviously was a tremendous experience for me. I went on to TA it for a couple semesters, and help pass on the knowledge that Dr. Wish has taught. I still, I've interviewed him multiple times as well, and that class probably was the one thing that sparked my interest, and also just helped build my entire foundation. How I trade right now is a little bit different, but it's like tweaks. It's not like I threw away the playbook. It's just applying my own way of interpreting charts, identifying setups, entering a little bit earlier, managing risk a little bit tighter, changing my time frame a little bit shorter, and just those tweaks are still true to the whole system that he taught, and is very similar, Pat, to how you operate and all that, because all of us with the CANSLIM foundation, the CANSLIM background that O'Neill really created for us in the book that you see over my shoulder, you just have to kind of tweak and apply it to what's going on in your life. Do you like to trade faster stuff? Do you like to trade stuff a little bit earlier in the base and find earlier buy points where you can manage risk? Or do you like to trade pullbacks more than breakouts? You just tweak the overall system, the overall process, while we're all focusing on the same stocks, the stocks that can double and triple, have tremendous earnings growth, sales growth, all of that. So yeah, in short, sorry, that might be a long answer, but Pat, any follow-ups here that you want to dive deeper into? And I apologies for everybody. I'm more used to be the one asking the questions, so if I ramble a little bit, my apologies in advance.
You're great, buddy. No, I love it. I love your energy. It's neat. Richard said something really profound, folks. He studied. He didn't just pull it together and say, I'll take a shot at it. No, he studied extensively. He found a couple of different, quote unquote, methodologies, setups that consistently work. And then he took them and modified them somewhat to fit him. And now they're his. And I'm not saying that to patronize you, Richard. I know you, and it's working, and you're successful. But you said something to me that's really good, is in your delivery, you're humble. You're not like, well, I do this and I do this. No, you're smart enough to know, hey, I got to get in line with what's happening. I love this quote. I had this taped on my screen for years. I'll believe in what I see and not in what I believe. That's a quote from Ed Sakota. I'll believe in what I see and not in what I believe. And boy, has that helped me through the years. What Richard's talking about, it's the exact same thing. He gets in line. He gets in line with what's happening and doesn't argue with it. I like that. So, and it's great because I know Dr. Wish was a major mentor of you, and I'm thankful that I've got to talk with him also years ago. And I think that's great. If you had to recommend any books, any specific books or other, a couple of things that's like, hey, this one, Pat, you didn't mention this one, but this one really helped me. Any books that you, sir?
Yeah, there's a lot of good ones. And there's ones that you want to read over and over again, because what's great about the best trading books is that with new experience, another year trading, another market cycle that you go through, you can go
Yeah.
back and read How to Make Money in Stocks and uncover so many more golden nuggets that you didn't know or didn't recognize were important the first time. So I kind of, the cat's out of the bag. How to Make Money in Stocks is definitely up there, which I'm sure it is for you as well. O'Neill's excellent. That's a great book to start with. My very first book is probably what I would recommend to people who don't have too much experience in the markets and they're just kind of diving in, is Nicholas Darvis's How I Made $2 Million in the Stock Market. This was
Yeah.
the first book that we read as a part of Dr. Wish's class. And what I love about it as a first book or an intro is it's just so much of a story. It doesn't read like a textbook. You're following along as Darvis makes the same mistakes that you're going to make. Buy stocks that based on tips, buy stocks that fundamentally look great, but the price action doesn't match. All those mistakes that he makes, and he tells it in a really compelling way, a great story. You're following along with him as he figures out his system that works for him, right? That
Yeah.
one's excellent. You can read it in an afternoon. So How to Make Money in Stocks, How I Made $2 Million in the Stock Market, both excellent books. Brian Shannon's books are excellent. Technical Analysis on Multiple Timeframes. He also has one on the Anchor VWAP. Definitely recommend those. And like we just said, like Pat just referenced, at the end of the day, we trade the charts. We want to analyze the charts as objectively as possible. And Brian is huge on identifying trends, and that only price pays at the end of the day. So we need to align with what price is telling us in the moment. So those are excellent books, especially if you want to sharpen your technical analysis skills. Brian Shannon's books are excellent. Market Wizards is excellent. I had some over my shoulder. Yeah, it's right there. So Market Wizards by Jack Schwager. You'll recognize the key principles that all these top traders, hedge fund managers, all of them, they all focus on risk. They all, again, have their own systems. Maybe they trade commodities, maybe they trade stocks, maybe they trade options. But at the end of the day, they all focus on minimizing risk as much as possible and jumping onto the trends that they view have the most potential for how they view everything. So they're trying to go after the best opportunities while taking as little risk as possible to get that asymmetric return potential. So those are some really good ones. I'll talk a little bit about the one that we just wrote later on, but I think those are some great ones to start with. Those three.
Excellent. Thanks. Thank you for sharing it. That's great. And folks, Richard knows what he's doing. Again, if he didn't, we wouldn't be doing this together, because I don't want him to hurt anybody. But there was a common theme. A word trend was stated more than a couple of times, and then controlling risk. I don't know how many times he said that, and it's not because he's wired too tight about it. No, we control risk. Richard's good at controlling risk. It's great. Get in line with that. I'll say it again. I had a quote tagged to my monitor for years. For years, I'll believe in what I see and not in what I believe. It's like, it's a great company. They got a great product. They got great earnings and great sales. It's just got to go up in price. Why? Because I think so? No. We let price guide us. And by so doing it, it does something else, and it complements Richard's statement. If you get in line with price and don't argue with it, by default, you're controlling risk. I love that. I'm going to ask you a couple more questions. Can I hit you with some more good stuff, good buddy?
Of course.
Excellent. How did you, and again, I'm not trying to get nosy here, but I think this is a good question. If there's any other books you'd recommend, lay them out there. How did you acquire your initial capital for your investments? How did you pull that together?
Yeah, so I was lucky enough that my parents started a Roth IRA as soon as I started working. I started working at 16, doing various things from construction to helping out at a lab that my dad operated. So I was working pretty early, and they would set aside money for me based on my income. So I was lucky enough that they started a Roth IRA for me, which for any parents out there, definitely do the same. It sets your children ahead so much if you can. So that's how I got my initial stake, and then that's grown. I've contributed it as I've began working, and then eventually started a margin account as well from my income. So that's how I acquired my initial capital.
Okay. Good. Can I keep asking more questions? Is that okay with you?
Yeah. Of course, that's what we're here
That's
for.
good. What's
Yeah.
your bank account number? Just kidding. No kidding. What,
Yeah.
um, how did you saved money to start it, okay, and build on it. Okay, good. But what were a couple of like your biggest challenge? And again, this is going to strike a nerve with a lot of folks. What were a couple of your biggest challenges early in your investing career? Things that were like, man, it really rattled me and I had to work through it. And yeah, and how did you overcome it?
Yeah, I would say I started learning how to trade at an interesting time. So 2018, we had the correction of 2018, and that brought my account down before I was really managing it and just leaving it index funds. Um,
Mhm.
so that was significant, and that obviously led to a pretty good rebound in 2019. But really, 2019 was really choppy until the end of the year. So trading during the original China trade wars was definitely interesting. There was a lot of choppiness. Forcing trades was something that I dealt with early on. Like I said before, one of my biggest mistakes early on was buying extended when a stock was already further
Oh
from
yeah.
a proper buy point. So I learned that the hard way. And then also, of course, I had to deal with the correction of 2020, the sharp correction, which actually at that point I had learned enough to protect myself and got out pretty close to the top as we broke the 21 EMA. I was using the 30 SMA back then, but very similar signal there to protect myself when that trend in the market really just took a nosedive. So yeah, those are a few early mistakes: is entering extended, forcing stuff. I think over trading is a very common mistake people make early on,
Yeah.
especially when you learn a system and you learn what a cup and handle looks like. Everything looks like a cup and handle after you do that. So that's one thing. Then another thing was I would focus on too many stocks earlier on. I would have a portfolio of about 15 to 20 names, and with smaller position size. And now this is something how I've changed over time. I focus on a lot less stocks. I do take higher position sizes now, but managing less stocks allows me to manage those that much better and execute that much better. So in a sense, you're improving your risk management because there's not all this distraction, there's not all this noise. You're not trying to track every stock under the sun that looks like it could be a buy, and you're managing what you own that much better. So now I typically have in when we're in a strong uptrend, 5 to 7 stocks is kind of what I shoot for. So a lot less. Um, I'm trying to think other early mistakes. I think also early on, every stock that meets the basic criteria, 25% growth, earnings growth, sales growth, you kind of view as equal almost. And what I mean by that is, as long as it meets that base criteria, it's like I said, you're forcing things. You might think it's a good trade, but now I try to focus much more on the exceptional companies, not just the ones that have 25% growth, but triple digit growth, triple digit sales growth. The
Yeah.
story is so significant. The theme is so strong. AI has propelled so many stocks in 2023 and 2024, and you want to think a little bit beyond just the raw fundamental numbers and think about,
Yeah.
is this overall theme also one that institutions which are creating the price and volume on the charts really care about and need to increase allocation in? So I think one thing that's changed over the past years is um, looking a little bit more for the best of the best leaders. This is something I picked up from Jim Ropel, who's a CANSLIM hedge fund manager. I was lucky enough to interview him earlier on, and like Pat said, be a sponge and just pick up little things from him, and focusing on the best of the best stocks with the highest potential was definitely one of those. Um, so yeah, I think those are some of the mistakes earlier on, and then just always trying to improve and manage risk better, and just get a little bit better each market cycle, and protect my capital during the bad times and try to do a little bit better during the uptrends. And Pat, I see you're out of frame. Are you still there?
I think Pat stepped away for just a moment. Maybe he just ran to the washroom. Let me
Yeah, no
jump in
problem.
here for just a second. I don't have his list of questions, but I will ask you this. What kind of advice would you give to someone? Hey, Pat, you want to pick I was just going to ask Richard what kind of advice he would give. We get questions a lot at Mission Winners of, how can I get started in this? How can I?
Yeah.
And there's all kinds of things. And I'm sure you've heard them all, Richard.
Yep.
But what kind of advice can you give to someone who's just getting started in this business and wants to kind of nuts and bolts and put the pieces together and get going?
Yeah, I think the biggest piece of advice is to read the books that I mentioned because that really lays your foundation. But you have to pair that knowledge that you might gain from reading them with actual seat time and actual experience. You can think of you can read about what O'Neill says theoretically, but until you experience a stock that goes up 100% or gaps up on earnings 20%, you're not going to truly understand how to manage that, what your mental state's going to be like when you do that. So there's a lot beyond what you can just read in books that you have to learn and actually have to experience for yourself. But with that being said, the books give you that foundation that will set you ahead so much. So yeah, reading those top books I think is key. Um, Watching a lot of interviews from top traders who are proven, have a process, have been doing this for years can be really helpful for sure because beyond the books, they can show how they've applied the knowledge and how they've developed their system, and you can just pick up one or two things from different interviews. And that will help you a lot. Maybe it picks up a screen that helps you identify the leaders a little bit faster. Maybe you notice a trader manages risk at the low of the day versus taking a 10% stop loss. Just those little tweaks that you can pick up, you can try it out for yourself and see if it helps. And that's how you kind of construct your system over time, is little bits and pieces from everywhere. But the books provide the core foundation below your system. What I will say is, I lost my train of thought, but yeah, the bits and pieces from everyone is really key. And then I think what's really important is don't feel the need to trade. If you're lucky enough to have 100K at your disposal, 50K, if you're just starting out, don't feel pressured to say, all right, now I have to manage that whole amount of capital when I'm still trying to learn, when I'm still in my learning phase. Instead, manage $100, manage $1,000, manage enough that the emotions are real and that you don't like taking a $20 loss, but don't manage enough that if you lose it all, it will set you back financially. So manage a much smaller stake than you have initially, because that's where you'll be, learning, making those mistakes. And it's much better to make mistakes when you're managing 1K versus managing 100K, because mistakes can get pretty big pretty fast. So those are a few things that I'll say. The last part on that is paper trading helpful? Obviously, I mentioned that in the class, we did paper trading. We did a simulated account. I think it was really good for learning the ins and outs of how do you set an order, how do you, place a trade, how do you do the very basics. But I think, like I said, managing a very small amount so the emotions are real is a little bit more effective than, you don't want to get stuck paper trading for 5 years and never place a real trade, right? You have to make
Mhm.
that leap eventually to actually trading money,
Yes.
to feel that emotion, and how that's going to impact you. And probably after 3 months or so, when you've learned those basics, how to place a stop loss, how to place a buy order, you probably want to move to real money, but again, a much smaller amount. That's not going to hurt you if you really get a setback. So I guess those few things: read those books, watch trader interviews who are kind of trading the same style that you want to learn. Start with a very small amount of money. I think those are some good beginner tips if you're just starting out. But it's amazing. There's so many resources now. It's like information overload. And that's maybe one other thing I'll say is, um, try to really learn from people who talk about risk management, talk about approach things the right way, aren't braggadocious, aren't trying to flex anything, because the best traders have been humbled by the market and they know what losses feel like. So as you're finding trader interviews, try to focus on real people, down to earth people who have done it and been there and done that. Um, and approach things like you would like to, so that you're kind of learning how they've applied the style, and then you can tweak your own as you're developing your own system. So yeah, hopefully that shows a few things.
Great thorough answers. I love it. I used to say this all the time at the IBD meetups. If you're not humble, the market has a lot of ways to humble you. And and it ties in exactly, complementing your statements there, and folks, just when you hear Richard talking about this stuff, know this, he's not paper trading, okay? It's real money. It's his money that he's doing it with, which leads to an important point for everybody. Yeah, paper trade, study charts and things like this, but you will find when it's your money out there and you're not doing it on paper, it's an entirely, and Richard, you know this, it's an entirely different mindset. And so, but when you do start small. If you can't make money buying, I'm just going to say it, consistently make money small, okay, with small amounts, and then build on it. Don't sit there and say, I'm going to try to make a killing off this, okay? It's not a good, you'll blow up, and you don't want to do that, okay? As far as your tools, I know you got charting and things like that, and I don't want to know any secrets or anything like that. What resources or what kind of charting research do you do? What information resources do you use for making investment decisions as far as this is the charting program I use and this is the fundamental research I do?
Yeah.
What kind of tools do you use, good buddy?
Yeah, good question. I use DeepView. This is the software that we're developing ourselves, deepview.com. And it's very well tuned for people who trade like us. It's got fundamentals, earnings growth, sales growth, ROE, all that stuff to handle the fundamental side, the number of funds invested. But it's also got a chart just like you see right here, price and volume, moving average, all of that. So in terms of the software as a whole, DeepView is what I use. My chart, it looks very similar to you. I've got a few moving averages. I've got the 21 EMA, which I love, the 50 SMA, the 200 SMA for that longer term trend. I've got the 10 EMA for that shorter trend. I know you like the 80 EMA, which, is basically the same area pretty much.
Yeah.
And then I have volume, of course, to judge accumulation, judge distribution. And then I also have one indicator, and just a quick thing on indicators, and this is for people starting out, you don't want to get lost in the sauce and say, I need the stochastic MACD, all on my chart all at once, because there's going to be so much noise. What I say about indicators is that, they can be helpful, but you have to master it. You have to go back in time, study it, when it worked, when it didn't work. Maybe it helps you more, maybe it doesn't. But the more experienced I am, the more I am, closer to price and volume. And the one indicator I do use is called relative measured volatility. And basically, it's a measure of the tightness of the recent range. So if you look at this chart of NVIDIA, basically RMV, what it tells you is on the right-hand side, right before the breakout today, RMV went down to 0. And that means that there's a tight price action range right there, versus back during the correction, during these expansions down and expansions up, volatility is very high. So it will be close to 100 during that level. So all RMV is doing is helping identify what it is. Are we relatively tight? Are we relatively are we expanding? So that's the only indicator I really use. Actually, I do have relative strength line as well on my charts, which if you're a CANSLIM type trader, can be very helpful to spot, how is the stock performing versus the rest of the market versus the rest of stocks. So that's kind of a quick view of my chart layout. In terms of the fundamentals I care about, it's the same thing you're talking about: earnings growth, sales growth. Earnings estimates I watch as well. How are they supposed to perform next quarter? I look at the trend in the number of funds invested in a stock, because institutions that are accumulating the stock is what drives those longer term trends that we want to capture. So I look at that trend. I like to see that increasing. I look to see what group the stock is in. How is that group performing? I think about, where's that group within the context of the larger themes that are in play, whether that's AI, whether that's, energy because of AI, because, maybe gold's running because of inflation. I try to think of those overarching things and how that could apply to what stocks might be the most in play currently. So that's a very quick run through of kind of the tools I use and kind of my general setup that I look at on my charts. But feel free to ask any follow-ups, or if you'd like me to expand on anything, happy to do so.
What's really good, folks, when you're listening to Richard, and again, he's a successful investor. I don't want you to think like, oh yeah, he's just a guy. Oh no, he's successful. He consistently makes money and he doesn't get in trouble. But one of the things that's important when you're listening to him, He's not bragging like, I do this and I do this. He lets the charts, the numbers, tell him what to do. Wall Street, I said this at IBD meetings for years, Wall Street can be a very expensive therapist. Don't argue with price. Get in line with it. These tools that he discusses, he gets in line with them, and he's a consistently profitable investor. And it's like, oh, you mean the last couple of months? Oh, no, I met Richard. God, how long has it been? 4 years ago? Maybe longer. And it works. It works. Has there been any, if you had to give advice like to a newer investor, okay, let's suppose I was brand new, okay?
Mhm.
And I said, okay, Mr. Moglen, you're doing a great job and stuff. If you had to just give me one piece of advice, and I know that's really narrowing it down, but one piece of advice, what would it be?
Probably the one piece of advice if I had to pick is set a stop loss with every order you place. And probably I'd just say keep it simple, 5% below your entry. I'd probably leave it there, but but there's a lot of good things. You know, I think reading those books I mentioned will give you a lot of the beginner advice that's so important. But yeah, I think setting stops is probably the number one thing because you need to give yourself enough time to learn this and how to learn how to approach it. You want to be able to survive multiple market cycles to gain that experience. And if you're not managing risk through your stop loss as well as position sizing, you're gonna blow out your account and be disheartened and all that and not gonna want to do this. And you won't be here for the strong uptrends in 2020 and 2024 that's when we really get traction, right? Is those longer term trends. So yeah, I think setting stops and risk management is the most important thing.
And folks, if you really soaked up what he was saying there, the big one is this: never argue with price. Opinions don't pay. Forecasts don't pay. Newsletters don't pay. One thing pays: price pays. Get in line with it. And you can combine price with volume action, as Richard's talking about, and it works. It will help you make better investing decisions. There's another question for you, sir.
Mhm.
You know, you've made a lot of personal sacrifices with what you're doing, and you're committed to what you do, and you're good at what you do. But I know it didn't come easy. You know, you did a lot of work and things like that. Overall, do you feel it was? I know what the answer is going to be, but I'd like you to embellish it. Run with it. Was it worth it?
Yeah, of course. I mean, if you put in the work with this, it's something that, I'm very young. I can do this for decades, and that's amazing. It's a skill that takes time to master, just like anything else. It might take 4 years, 5 years to really build your system and really internalize your system, not just memorize to look for a cup and handle, to really internalize what that means in terms of supply and demand. But once you do this and you can manage risk and get out of the way during corrections and participate again in the uptrends, it's something that you can participate in every bull market in the future and catch the future Nvidias, which is a lot of fun. Catch the future PLTRs. You know, the search for those names is what keeps us interesting and keeps us fun. And it's always a challenge because it might shake you out and you have to work your way back in, or you might miss it and capture number two. But this trading always challenges you. There's always going to be something slightly different that you have to learn and improve, and that continuous improvement is a lot of fun, at least for me. So yeah, I'd say this is 100% worth it and can be incredibly rewarding, obviously, as well. So yeah, I have no regrets at all to investing the time that I did. When I was taking that class with Dr. Wish, I
Yeah.
think I took that class, which was 2 days a week. But every week I was probably spending 2 hours. No, every day of the week I was probably spending 2 hours looking through charts, trying to learn this, watching interviews, all this. So I really dove into it, and that helps. But again, there's only so much knowledge that you can that you can soak up. You have to actually apply it too and gain that experience, that seat time. So that hard work, you need to do it, but also you just have to recognize that it's gonna take time to develop your process, gain confidence, make the tweaks necessary to build your system. So yeah, I think it's 100% worth it to be pretty short.
I read this quote years ago when I was first getting started in this business. And at first I thought, well, that's kind of goofy, but it complements your statements right here, sir. The idea, and it just goes like this. If you want to learn a lot about ducks, don't read about ducks, study ducks. You go, well, that's stupid. No, it's really not. Study ducks, study their behaviors. If you want to learn a lot about, and Richard's done it, stock price movement, study charts. You'll start to see recurring patterns, and it doesn't need to be a cup and a handle, but Richard, you know what I'm talking about. You'll start to see them, and you will see charts, folks, are a reflection of human emotions, fear, greed, panic, complacency, and it's all reflected in the charts, and you can get in line with it. We don't impose our will, and Richard's alluded to this. You don't impose your will on what the chart says. You simply get in line with it, and it works. Here's another question for you, good buddy.
Mm-hmm.
If you had to pick one habit that separates the best traders from everybody else, and you're a good investor, okay? I don't want to call you a trader, but I could call you a trader, but you're a good investor. If you had to pick one habit that separates the best investors or traders from everyone else, what would it be, Richard? What would you say, sir?
What habit? I would say, well, first of all, I think just having a routine that gets done consistently on a daily basis or weekly basis is something every top trader who I've interviewed, they have that. And the reason that's so important is because that's keeping them in tune with the stocks that are setting up. That's keeping them in tune with the market, how it's setting up. That's identifying the groups that are leading, the themes that are working well. All of that is identified in a daily routine or weekly routine. And if you work full time, which probably many people watching do, during that weekly routine can get you 100% in gear with the market and get you set up with where it's going. But I think, the one habit is doing a routine every day that walks through charts of the indexes, walks through index ETFs to see where the money's flowing, identifies, what are the top promising growth stocks. I think that's something that's really key and can help a lot of you. And going back to studying charts, I think that's key. And one thing that I've done is gone back and studying the best performers each year. And this is something we did in the handbook is we have model book charts of recent winners going back the past 6 years plus. And you can learn so much by studying NVIDIA the past 2 years. You can learn so much going bar by bar through Tesla. Where did volume come in? What was price look like before it broke out? And you'll learn the characteristics of stocks that you can pick up then in real time and apply those characteristics, screen for them, look for them, all of that. So yeah, just to go back to what we were talking about before, studying winners is the best shortcut that you can have. But it's not really a shortcut because you have to put in the work. But you'll be able to distill those characteristics, those edges to look out for later on. And that will help you spot whatever the next NVIDIA is, whatever the next Tesla is, when it's setting up and taking off and is ripe to be entered to catch the trend. So sorry if that didn't answer your question, but I forget actually what the question was, but feel free to rephrase it if you'd like.
You're spot on with what you got going on. Richard brings up a good point, folks. And one of my degrees is in psychology. And charts are a reflection of human emotions. I'm not getting funny here and corny. Fear, greed, panic, complacency, and it's all reflected in the charts. When you understand that, you will have a far better, and Richard was alluding to it, you will have a far better understanding of why charts do what they do. And what do? We don't impose our will on it. We let, again, price and volume, combine the two together, and you will see patterns that happen over and over. They recur. And you can say, why is that? I'll tell you why. I'll say it again. Charts are a reflection of human emotions, fear, greed, panic, and complacency. And it's the same emotions existed in humans when they lived in caves. It's the same thing, but it's reflected in the charts. And I love that. If you had to, like one habit, okay, let's narrow it down here, really screw this down a bit. Like one habit that's, man, this is really what's important. You can forget a lot of other stuff, but stick with this. Would there be any one habit that you would think of, Richard, that you would give advice to a fellow investor?
I would say have one screen that looks for the base criteria we're looking for, and go through every single chart that shows up on that screen every single day, sorted by, you could do it alphabetically, but kind of what I like to do is sort it by percent change on the day. So I see the biggest movers at the front and then see the weakest stocks at the bottom. But just going through those charts every single day will again, it will show you what themes are acting well, because you might notice, all right, all the semiconductor stocks are gapping up today, or acting out, acting really well. They're breaking out today, and that's a mental thing to say, hey, maybe I'll focus more on that group later on. But just again, that one habit is having a screen that looks for minimum criteria such as relative strength, earnings growth, sales growth. For me, this is the Deep View Leader screen. This is a preset that I've created that looks for these same things. And going through that screen every single day is at the heart of my routine. And again, it shows me where the money is flowing. It shows me the opportunities that are potentially actionable for the next day. It shows me what stocks are being distributed. So maybe the leaders, maybe we're later in an uptrend and things start breaking down. It gives you that early warning sign that says, hey, I want to be more defensive now. But until you look at the stocks, and this kind of goes back to watching the ducks itself, you don't want to read about what the ducks are doing in the paper, because that's delayed information. Actually watching the ducks in real time, and this is watching the leaders in real time versus reading about it a few days later, you'll notice the warning signs. You'll notice, oh, I got stopped out a lot of the leaders. Oh, they're all breaking below the 21 EMA, the 50 SMA on increased volume. I'll be more defensive and focus on capital preservation in this moment. So yeah, I think just going through one screen and just making that a really consistent routine, because routines are only important and helpful if they are consistent. We want consistent inputs so we can, gauge the outputs and see what's going on. But just going through one screen that looks for minimum criteria, and reviewing that every single day, no matter what, that's a really important habit that I think can, and again, it can help you immensely as a trader. And that's what the best traders do, is they have a routine, they stick with it. And whatever's going on in their lives, that's they make sure they get that done so that they have adequately prepared to trade the next day. Because if we don't prepare, this is a serious business. You're going up, real money is on the line. You have to prepare, just like a pro athlete isn't gonna, go up against a top pitcher without studying what pitches he likes to throw, what situations he likes to throw. Otherwise, bottom of the ninth, 2 outs, you're gonna strike out. You're not gonna be ready to knock that, an RBI double in. So you have to prepare yourself, and going through that screen, is the best way to prepare. And it's something that gives me confidence. I know if I do the work the night before, I'm ready to trade the next day. I know I've thought through what could happen to my positions, what could happen to the ideas on my watch list. So I'm not trying to make those decisions in the moment. Instead, I'm just kind of recalling what I've already decided the night before. And this is actually something I want to bring up. One thing I did have to deal with is I grew up on the East Coast in Maryland, and the market opens at 9:30. But over the past few years, I moved to the West Coast, Seattle, and it's great that the market ends at 1 p.m. here, and you've got the rest of the day to enjoy yourself, do your routines, all of that. But the market opens at 6:30, and before I moved, a lot of my routine was done the day before the market opened. Some of my screening, all of that. But moving to the West Coast, I did not have the luxury of that time anymore, because, I have to wake up at 6 a.m. and make sure I have the bare minimum ready to be prepared. So really, I've moved a lot of what I used to do in pre-market to the night before and post-market. So I've got all that work done. And then when I wake up, I just kind of get mentally ready, have some breakfast, go for a walk, whatever I need to do the last tweaks to my daily plan. I know what I'm going to do already. And then it's go time, because I don't have much time in the morning. So I forget where I was going exactly with that, but just your system and how you do your routines is going to depend on how much time you have available, whether you've got kids, whether I guess you're on the East Coast or West Coast. All that is going to impact how you do your routines. But having a routine is the critical thing, and having something that consistently gets the PLTRs, on your charts and the
Yeah.
Nvidias, whatever's working in. Because if you don't see it, you're not going to be able to trade it and profit from it. So you need a routine that gets it at least in front of your eyeballs. So that might be a little bit long winded, but yeah, hopefully there's some good stuff in there.
No, it's interesting what you're saying too. There's a recurring theme with what Richard talks about, studying the charts, and you want to get better, as he's pointing out too. Study past winners. Everybody says, well,
Yep.
I'm just going to look at what's happening now. No, go back in time. Folks, this is a fact. Patterns repeat. You go, really? No, they really do. And I'll tell you why. Charts are a reflection of human emotions: fear, greed, panic, complacency. And it's all reflected in the charts. When you understand that, and Richard's talking about this, studying winners, but study losers though too. Learn both sides of that coin, and it will help you make better investing decisions. I don't want to go too much of your time here, sir. Just a couple more out of respect for you, but
Yeah.
you've interviewed a lot of great top traders through the years, and I respect your work. What's one lesson that truly changed the way you trade or invest? Like when you're talking to somebody who's really good, was there any one lesson that like, wow, I got to remember that? Anything hit you?
Yeah, the biggest concept, and there's a lot of things because I take something from every single interview that I've had. Pat, with you, the good bars versus bad bars. It's such a simple thing, but it's what you gotta look for as a beginner as you're learning to interpret price action. But if I had to say the biggest thing, I think it would be learning Oliver Kell's cycle price action. Oliver won the U.S. Investing Championship in 2020, 940% return, amazing performance. He runs a fund now. And his cycle of price action is basically a framework that defines the different stages of price action from an uptrend to a downtrend and back again. So it's putting a framework around the emotion that we're seeing on the charts. A wedge drop is breaking below the moving averages. Then a reversal extension is when we get extended below the moving averages and we put in a base bottom, like we see here with Nvidia right in early April. And then you've got the wedge pop, which starts the new uptrend, and then EMA crossbacks as we trend and pull back to the moving average and reconfirm up. So learning his cycle of price action kind of put a framework and definitions to what I was already seeing in my own study of price action. But it just helped clarify everything, and I think it's an amazing framework that obviously it's a guideline, it's a blueprint, but every stock kind of follows that same cycle because as you said, it's a representation of emotions, and the cycle of emotions is reflected on the charts through price and volume. So I think that's the number one thing. A second place there, or there's so many great ones, is from Jim Ropel. Just watching earnings gaps and seeing how they're respected, if they're bought up and they continue higher or sell off. That's a great representation of the risk appetite in the marketplace. Institutions, buying often use those gap ups to sell into strength and sell our positions if we're in a risk off environment, a corrective environment. But early in an uptrend, those gap ups, when they just gap up and begin trends, that's a sign that institutions are becoming more aggressive and want to increase positions in a name that is blowing it out of the park in terms of earnings and sales growth. So that's a second place, or another thing that was a huge takeaway. Then from one last thing that I'll say, from Ross Haber, watch the leaders. We've talked about how important it is to analyze price action today. Watching the price action of the leaders, specifically the best true market leaders, best CANSLIM template stocks, the Nvidia of the cycle. Watching how they're going through their cycle will give you a clue about what's going on in the rest of the market. If they start breaking down early, that probably suggests that the market's going to follow. If they start breaking out early, like we've seen over the past few weeks, that might be a sign that there's a tradable rally that's starting to occur. So those are a few things that have really stood out. But every single person who I've talked to there's been at least a few things that I take away. And yeah, just the key principle behind everything is every single one focuses on risk, stop losses, cutting losses early. And then they all, have a few trades each year that pay for all those small losses and then some, and really move the needle in account. But in order to protect themselves and make sure they can participate in those great trends that pay for everything, they have to have those losers that they cut and keep really small. So those are a few things that have really stood out over the years.
Great, man. Good, thorough. Folks, I hope you're taking notes, because what he's saying is the real deal. Okay. And he's mentioned more than a couple of times this phrase, writing friends, letting them work. It's so important. But he also flipped the coin and said something that's just as important. Keeping losses small. I can't stress that. And I know Richard's the same. Control risk and banish this phrase. I said this at IBD meetups for years. Wipe this phrase out of your vocabulary. It just has to. Oh, it just has to. Oh, it just has to go up. No, it doesn't. Oh, it just has to stop going down. No, it doesn't. It's going to do the stock, and Richard alluded to this. The stock's going to do what it's going to do. And good investors just get in line with it. They don't argue with it. All right. And this is my own deal. Okay. But I think Richard's the same. I never average down. Never. You're wrong. Don't make yourself more wrong. Control risk. So we're going to wrap this up, Richard, out of respect for you. We could just put a big overview on this. Because I know this, there's people here that are relatively new to investing. By the way, I'm not going to say trading, I'm going to say investing, okay? If somebody came up to you and said, Mr. Moglen, you're a good investor. Can you just give me a big flyover? What advice could you give me? Because I know this. We've got people in here that are relatively new, and I'm glad you're here. Folks, those of you that are seasoned, I respect you because you're getting better. Those of you that are relatively new, I respect you because, and this is one of my favorite words, you're demonstrating the initiative to get better. You're not waiting for things to happen. You're making it happen. I read this quote years ago, and it's a fact. The best helping hand you'll ever find is at the end of your own arm. Take that mindset and say, this is my opportunity to change my life. This is my opportunity to improve the life for my family. This is my opportunity to get away from a 9-to-5 job, although you'll do this more than 9 to 5, okay? This is my opportunity. If you had to give a big overview, Richard, because we'll wrap this up, sir. And again, thank you for your time.
Of course.
What big picture advice would you give somebody who's relatively new to this? Go ahead and take it away, sir.
Yeah, I think to add what I said earlier, which was read those foundational books, How to Make Money in Stocks, Nicholas Darvis, Market Wizards, to get that foundation, to start small. I think what's really critical when you're treating this seriously, because this is serious, you need to write a business plan. And what I mean by that is you need to define trading rules that define how you're acting in the market, your buy points, your sell points. And to start with, they can be very simplistic, but you just need to have something down on paper. And I think you should actually write it down on paper. I don't think you shouldn't keep it in your head for sure. And even writing on the computer, I think it just you internalize things better when you actually write them down. But rules for market analysis, for defining an uptrend or downtrend in the market, and how exposed you're going to be or how aggressive you're going to be during those times. Rules for stock selection. What are the fundamental criteria that you're looking for? What are the technical criteria? And a lot of the books that I suggested will give you a starting point, right? That you'll tweak over time. Rules for buy points. What is one setup? Don't try to master pullbacks, breakouts, earnings gaps, all of that. Focus on one setup when you're just getting started. Go back and
Yep.
study it. Go back and study the best winners and just focus on getting really good at that one thing because later on you can add different setups and different tools, but early on you really just want to internalize one thing to look for and learn the ins and outs of that. So focus on one setup, then apply a really simple but effective way to manage risk when you enter. Say, I'm always going to set my stop 5% below, or I'm always going to set my stop below the low of the day before, or the week's low. Have something very simple that's very repeatable, because we're looking for repeatable actions here, repeatable inputs to get consistent outputs that then we can analyze and tweak and to improve our system. Then if it's at a profit, how are you going to manage the stock? What is your sell rule? For me, typically if I am a strong trender, 2 closes below the 21 EMA is at the very heart of my sell rule system, and that's really simple, but that allows you to catch a lot of moves from base to base, from consolidation to consolidation. And for my time frame, swing trader / position trader, that's the move I'm trying to capture. I'm not one to sit through breaks below the 50 SMA and sitting through a base. I want to kind of ride the momentum trend in between each base, and that's what the 21 EMA allows me to do. Then, in addition to that, simple rules for position sizing. I think a lot of people earlier on, they get into trouble because they try to size too big too fast. It's like lifting weights. You don't want to size 50% of your position portfolio in one stock without learning how to manage risk and technique. And even then, you probably don't want to do 50%. But even a 20% position, you want to learn how to properly manage your risk before you go and try to manage that size. And you want to manage, you want to build technique. If you're weightlifting, you start with lifting the bar. You don't lift 200 pounds off the bat because you're going to hurt yourself. It's the same in the stock market. If you try to position size too big, too fast, you're going to hurt your account. And then you need to have a feedback loop to this rule set. So how are you going to analyze your trades? What's going to be your process for adopting new rules? All of this needs to be part of the business plan, your trading rule set. And I think that's the biggest thing, is having a plan to start with. Start with something simple. And then later on, you can always, as you gain more experience, more seat time, read new books, you can add and implement things that, enhance what you already have. But I think in a nutshell, having rules for risk management, especially, is probably the most important thing I'd say to a beginning trader.
Excellent. Well done. I always, when I was doing the IBD meetups, people would say, "How do you find winners? What do I look for?" And it complements what you're saying too. One of the best exercises I always tell people: you want to get good at buying winners and riding them, study past winners. The patterns repeat over and over because it's a reflection of human emotions. Again, fear, greed, panic, complacency.
Yep,
It's
100%.
reflected in the chart.
I think you're on
Get
mute,
in
or
line.
I don't. Oh, there you go.
Go ahead.
Sorry, Pat.
buddy.
I hear you. Sorry about that.
Oh, no, I thought you wanted to say something. Didn't want to cut you off. Okay.
No, I'm good.
So, okay, good deal, sir. So anyway, I hope you took notes. This is like a class that you took notes on what to do. And Richard's very good, and you combine both strong fundamentals and strong technicals. And you combine both together. And Richard pounded the table on this more than a couple of times, folks. You want to get good at buying good stocks, study past winning charts. Look at them, study them, tear them apart. I mean, I had chart books in here from 20 years ago that I kept. Study them. The patterns repeat because it's humans making the decisions, and humans' emotions, and that's part of my psychology degrees. Fear, greed, panic, complacency. It's the same emotions that occurred when we were in caves, and it happens and it's reflected in the charts, and you get in line with it, and you control the risk. This is great. Richard, I'm going to let you close us. Is there any other key point you would like to make, sir?
No, I think we've covered the key things. Hopefully this has been helpful to you, especially if you're starting out. Like I think Pat said at the very beginning, we're cut from the same cloth in terms of how we approach things. We're probably trading the exact same stocks at the same points without even knowing it. Because yeah, exactly.
Oh yeah.
So I think learn a system and build it something from the ground up. read all those books. And one thing that I'll shamelessly plug is we just wrote a book on building a trading system specifically for newer traders called the Trader's Handbook. And what it does is it kind of ties in all the resources that I've talked about, how to make money in stocks, Darvis, the top trader interviews. All those concepts are kind of distilled in one simple way to build a trading system in this book. Each chapter is about a different aspect of your trading system, from stock selection to setups to risk management. We've got a whole chapter on risk management. And then, Pat mentioned multiple times, studying winners is the most important thing. And the last 200 plus pages are model book charts from the past 6+ years. Annotated, showing setups, all of that. So if you're interested, the Trader's Handbook, it's coming out in May 27th. You can pre-order it right now. And I think this will help a lot of traders and set themselves on the right path. Books are the best ROI thing you can do to learn how to trade. Again, you can learn the concepts, but you want to go out and apply the concepts in real life. And actually, with each chapter, we have a challenge such as mark up a chart, identify edges, list out your routine. So you're applying the concepts. You're not just reading passively, you're actually actively building your trading system as you go. So I just dropped the link in the chat if you're interested in it. But I think this will help people. And Pat, I know you and Owen got a chance to read it. So appreciate that and the quick blurb. But yeah, I think we've covered a lot that's good today. And Pat, I'll throw it back over to you. Anything you want to add to close?
First off, thank you. Thank you for your time. Thank you for sharing your wisdom, your market wisdom. And by the way, folks, when I'm saying that, I'm not saying that to patronize them or anything like that. It's just, I'm going to cut to the chase. This isn't an easy business, okay? It ain't. It's hard. But there's people out there that will share foundations and teach what to look for. And I'm going to synthesize it. Focus on the best of the best. What to look for fundamentally and what to look for technically. Combine them together in the books that they talk about. They do things like that, okay? And do the best of the best. You were listening to Richard, and I hope you took some notes on things like this. Do you remember, did you note a couple of the stocks that he talked about? Well, I remember one, because we were wrapped into it big time. Palantir, PLTR, and I'm not bragging. Punch up PLTR. Look at the chart. Look at the price and volume action. Look at the fundamentals, and you can see why it was talked about. This is a fact. The vast majority of winning stocks are leading stocks in leading groups that have, and these are facts, folks, great earnings and are great sales. A product that's new, unique, and different than anybody else. They're an elite grader could see it, which increases the probabilities that they will buy also. That's what you want. Do that. And the last point I'll make here, never argue with price. You can stack the deck in your favor as best you can, but the one thing that pays so much for your time and sharing your knowledge thing. If we can't, this is my X to grind. If we can't, this helps everybody. Have a good, safe night. And remember this, focus on clean and simple. And the last point I'm going to make, never argue with price. Never. Let price guide you and stay away from, thank you.
Yeah. Thank you, Pat, for having me. Appreciate it.